Ticker symbol ABNB has stayed flat for the past year, rising about 2%. But today we'll be looking at an established company with loyal customers, which has experienced incredible growth as it has solid fundamentals and improving efficiency ratios. So today we'll be looking at Airbnb, a holiday rental company. In their annual report, they state that they allow hosts to offer unique stays and experiences that make it possible for guests to connect with communities in a more authentic way. Basically, what they have is a platform for hosts, which will leave their apartments or their houses up on the platform, and for then guests to rent these houses for a couple of days, for a couple of weeks, and enjoy their holidays instead of staying at a hotel, staying in homes as unique as the ones that you can see in the pictures. Now, they say that over 5 million hosts have welcomed over 1.5 billion guests in almost every country and region across the globe. And in their annual report, they also lay out a 4-step strategy in order to fuel their long-term sustainable growth. First of all, they have plans to attract more hosts. This will allow them to obtain more houses and expand their supply in their platform. They plan to do this by expanding use cases, increase the support provided to hosts, raise awareness about how easy it is to become a host, and improving the overall experience. Next, they want to grow and engage their guest community. So the other side of the coin, they intend to attract new guests to increase the frequency of use. Third one is to perfect their core service. This basically means that they want to increase engagement and brand loyalty, and the way they intend to do this is by adding new features based on received feedback, which they started doing a couple of years ago, and around every 6 months they update the app to add all the feedback that has been received from guests and hosts. And number 4 is to expand their global network. Currently, they plan to invest in under-penetrated markets by updating regulations to allow more hosts to join their platform. But now this company gets extremely interesting when we look at their financial metrics. First of all, they have a very impressive return on capital employed of 22%, which is above our threshold of 15%. They have an interest coverage ratio of 18 times and a cash conversion of 257%. They have a very solid profit margin of 71% and an okay operating margin of 15%, which is expected to increase as they scale up. Now, this is what I was talking when I said that they have exponential growth. You can see that their net income has grown by 143% year on year, and every single metric, whether it's their revenue, their gross profit, their net income, has been increasing every single quarter. Now, their efficiency ratios have been increasing. Of course, they used to be negative before 2022. However, now they're uptrending and they're staying right where they should be, where if we look at return on invested capital, it is above 60 times, which is great for a company like Airbnb. And now, when we look at their financial position, this company is great as they have a very solid 1.6 current ratio, and they're maintaining their total assets above their total liabilities. And on the other hand, they're not over leveraging as they have a lot more equity than debt. And when we look at the fundamental analysis, this company gets a very solid 7 out of 8 ticks, as first of all, they have low liability risk, which is something that we actually identified in one of the first slides. Then they have a very solid balance sheet as they can cover all their short-term liabilities just by using their current assets. Then they generate extremely consistent cash flow, which is growing organically every single year, which is good to see. And why is this happening? Well, this is because they're also able to grow their revenues organically. Organically basically means that they do not need to acquire other companies in order to grow their revenue, that they can do it just by expanding their current offerings. Now, the most important tick here is the pricing power and existing moat or competitive advantage, which I believe that Airbnb has a very unique positioning. The only company that is offering something similar to Airbnb would be Booking, but Airbnb is more focused and is the king of rentals that are not hotels, at least in the US. I don't know about your case, but in my case and the majority of people that I know, whenever you're booking a trip, you tend to always look on Airbnb because first of all, prices may be more attractive. Second of all, the locations may be a lot better. And thirdly, it's more comfortable and more affordable to actually stay in an Airbnb, as most of the time you can actually cook there. You have a lot more space if you're traveling with friends or if you're traveling with your family. You're normally in a more residential area or closer to the center, so it just makes your travel experience allow you to connect a lot more with the city that you're actually visiting. And their pricing power is great because what they do is they connect hosts with guests. So they have a lot of power on hosts, which would not be able to rent out their places if it wasn't for Airbnb. And they have a lot of power on their guests, as they wouldn't be able to book the stays if it wasn't for Airbnb. This allows them to increase their share and the fees that they're actually taking from every single booking without customers actually leaving the app. Now, one thing that I did not like is that they are not paying any dividends and that they're not buying back any shares. This would be great to see, as an investor usually tends to get a lot more value from companies that do these things with their free cash flows. However, maybe in the future they start doing this. Now, when we look at their valuation analysis, Airbnb does look undervalued because their price to earnings ratio is below their average for the past years. Now, any data that we see before 2022, because I believe their earnings were positive at the time. However, if we look at their free cash flow yield of 4.12%, this is higher than the long-term inflation of 3%, which also implies that the company is currently undervalued. However, there are some possible challenges and risks that I do see upcoming for Airbnb. My main risk is for possible upcoming regulation changes, where cities such as Barcelona are already limiting and placing regulations on rental properties, where they don't want the majority of the apartments in their city to become Airbnbs. They prefer for people to actually live there. And I believe that they passed a regulation for 2030 limiting the amount of Airbnbs or rental properties in the city. So this is a worry that you should keep in mind when investing in Airbnb. They do operate in a market which is very cyclical, as it is the tourism industry. However, since I don't see a recession coming anytime soon, I think they will be fine in this aspect. So before we move on, please remember, I'm not a financial advisor and this is not financial advice, so please do your own due diligence. However, I believe that this company has a strong competitive advantage. It provides consistent, predictable, and growing cash flows, and it offers a higher return on capital employed, which means that it can create value for the investor. So I believe that this will be a good company and very likely a great investment. However, the regulatory uncertainty is keeping me on the sidelines for now. So thank you for watching. As always, this has been the Cashflow Compounder. Join the Patreon for extra content, and there is a link in bio for a free stock if you join Trade Republic.